Good morning. Today's Wednesday, June 5th, and the chart you're looking at right now is the E-Mini S&P 500 daily chart. As you already know, this has been a strong up year. You could be buying the dips pretty much all year up until this point. Now, I would venture to say that right now is the time to, instead of buying the dips, I think we can sell the rallies. So if we get a rally up in this area where I'm drawing, I think you'd be safe to sell it short, looking for at least the market to try to retest this level and come down and potentially come down to that 50 exponential, even lower than that. So that's what I'm anticipating here. Yesterday, look at yesterday, the market came down, came real close to testing or taking out the low of June 3rd, missed it just by about a point, rallied up considerably. Now, if you were to draw the Fibonacci retracements from the all-time high here down to this low, you can see that yesterday the market rallied up to a 38.2% retracement before selling off. Okay, and in last night's trading, the market is trading down. So the market closed yesterday at 1631, and if we go to a night chart here, the market's trading about 1627 right now. Traded down as low as 1621 3/4, retesting yesterday's low. So right now I'm taking the stance that if we do get a rally, you're going to want to be a seller. And the first rally you could have been shorting was yesterday when the market ran up to that first Fibonacci level, the 38.2% retracement. Now again, remember I drew it from this high down to the low that was made on Monday. Market went right to the 38.2% retracement before selling off. Let's look at an intraday chart yesterday. All right, this is yesterday's chart of a 3-minute chart. I'm going to try to make these videos shorter. I've had some people complain saying they're too long-winded. I apologize. I'm just trying to give you as much as I can each day. So look at yesterday, the market opened up a little higher. All right, opened up here. Look, it rallied up right in this level, right in here, right? Was that 38.2% retracement that I just measured off the daily chart. Not only that, look at the market made an original the initial high here, came down, came up, tested the high, took it out by only 1 full point, and look at what we created. Look at what the market created, an inside pattern. I've shown you this a million times. The inside pattern on a retest of a high or a retest of a low. Once the market broke down through the low of that inside pattern, retesting the high of the day, barely being able to take it out, and coupled with the fact that it was a 38.2% retracement off the daily chart, was a sell signal written all over it. The market should move lower, and it certainly did. Look at this point. The market came down, took out the low of the day, which was your first sign that the market's really going to move lower by actually creating that inverted V, right? The market ran up and then came down, took out the low of the day. It was at this point where look, this was a sell all over near the high of the day. That counter trend move, right? The counter trend move, when it took out the low of that inside pattern, had sell written all over it. Now, if you had exited the market anywhere in here, your re-entry back into the market would have been either in here or waiting for further confirmation for those of you that tend to be more conservative, right? Because we were supporting at the 200 exponential moving average here. Once we broke down through that 200 exponential and the bars officially turned from green to red right in here, right? My software caught that, okay? As soon as the bars turned from green to red, this right here, folks, this is like taking candy from a 2-year-old right there. Bars turned red, which meant that the trend officially of the day turned lower. Now look, you might be thinking, well, the bars are green. Why would you be selling it? Remember, this is a counter trend trade. Okay, this is on a retest of a high, not being able to take out that high by very much, creating one of my favorite patterns, which is that inside bar where the market contracts, right, and builds up that energy. takes out that low, that's a short. Now, for more conservative traders, once the bars turn from green to red, okay, that's where you're looking to aggressively look to short the market. And that first time was right there. Turned red here, came down, put in the low at the daily pivot, rallied up. Look at how the 50 exponential crossed down through the 200 exponential right there, and then rallied up to it, kissed it, and there you go. So that was a really good trade. So just real quick here, real quick, and then I'll let you go. Still long the CEF trade, right? Still looking good, $16.11. Still long gold, looking for that double bottom, right? It's overnight, it's trading at 135.51 on the GLD. All right. TBT, real quick, still looking for that pullback, still looking to get long, looking for the market to come down here between the mid to the lower band, looking to go long here, looking to buy it there. Or if we don't get the pullback and we're able to actually close above these highs, then I'd be looking to get in a little bit on the breakout, okay? Hope that helps. Have a great day. Bye for now.